Hello, and welcome to this week's PennEnergy Petroleum Video News Update. I'm J.B. Avance. The price of oil continues to trade at elevated levels in New York and London, based largely on violence and social unrest in the Middle East and North Africa. Although U.S. stocks are at record highs, the price of oil is trading above the $104 mark on the NYMEX, and Brent crude is trading considerably higher in London. Nonetheless, various OPEC ministers have stated oil production levels will likely remain the same. U.S. President Obama revealed his new energy policy Wednesday, calling for a 30% reduction in oil imports by 2025. Focusing on a diversified energy portfolio in the future, the Obama administration has taken aim at oil and gas producers that have let onshore and offshore leases sit idle. On the other hand, industry groups point to the administration's de facto drilling moratorium in the U.S. Gulf of Mexico and stringent environmental regulations as reasons for decreased domestic production. Louisiana Oil and Gas Association President Don Briggs responded saying, instead of taking blame to its failed energy policies, the administration is attempting to put pressure on oil and gas companies to increase U.S. domestic production. National Petrochemical and Refiners Association President Charles Drevna said President Obama was wrong to believe he could achieve energy independence by imposing costly mandates and taxpayer-funded subsidies to energy winners and losers. After months of negotiations with the government of Uganda, London-based Tullow Oil has been able to resolve tax issues and move forward with a planned divestment of interest in its oil-bearing Lake Albert Rift Basin acreage. The company signed a $2.9 billion sale and purchase agreement with CNOOC and Total to divest a 30% stake to both companies in its 3 blocks in the East African country. Though stalled while Tullow tried to work out a clear path with the government, exploratory and appraisal drilling is now expected to move forward, as well as the development of the massive Kingfisher oil field. Development will include various production facilities, as well as an export pipeline, and oil refinery for the company may also be in the works. Things are heating up in the United Kingdom after Chancellor George Osborne announced that offshore oil and gas projects in the North Sea would be subject to an additional tax. In an effort to relieve pressure on UK motorists, the increased tax could raise more than $16 billion in revenue for the government over the next 5 years, and will be rescinded if oil prices fell again. Critics have come out against the dubbed tax grab, stating some fields will now be paying up to 81% in taxes. Additionally, Norwegian producer Statoil has already shelved a multi-billion-dollar heavy oil development on the UK shelf due to the tax changes. One of the UK's largest recent discoveries, the Mariner heavy oil field and the questionable Presnay field, hold an estimated 3.5 billion barrels of oil. In shale news, Italian firm Eni has signed a cooperation agreement with the Ukraine in an apparent move to develop possible unconventional resources in that country. Late last year, the Ukraine claimed to hold the world's largest shale reserves, although the exact amount of estimated shale resources was not stated. Various local and international production companies are revving up drilling and exploration for shale resources in the country. Should the Ukraine contain the amount of hydrocarbon it hopes to hold, Eni is now well positioned to gain reserves throughout the agreement. Although the country has some shale potential, Mexico continues to lag in its development. State-run Pemex recently revealed production in Mexico has dropped again for the 12th year in a row. While reports have surfaced that Pemex is drilling an Eagle Ford shale well, production is waning in Mexico due to the lack of knowledge in maintaining production from older fields, as well as inexperience in deepwater drilling in the U.S. Gulf of Mexico. Nonetheless, Mexico is holding its first public land auction in more than 70 years. Legislative reforms were necessary to allow international producers to develop Mexico reserves, but Pemex is eager to redevelop lagging fields to increase production via these new partners. Thank you for watching this week's Petroleum News Update. Visit PennEnergy.com for these stories and much more. Thank you.